From Chamath's point of view, it is critical to always consider the opposing viewpoint and rationally argue with oneself the possible reasons why the opposing viewpoint could be correct. At this point in time, what people would say if asked is something along the lines of, okay, the Fed's going to capitulate at the beginning part of 2023. We have a fairly good forecast for all of the rate rises that have to happen. Everyone is doing their part to get through this difficult time by either increasing their pricing, decreasing their costs, doing both, or laying off employees. It's possible that we've arrived at our destination, but what lies beyond that? He believes, as he has mentioned in the past, that the other side begins with energy. And the reason he thinks it's essential is that it really is the conflation of an economic system and a political system by means of an instrument. He also believes that the other side begins with energy. He believes that the current situation in Europe has several layers that need to be peeled back. Just a few days ago, the French government basically said that they intend to reduce nuclear power production. You question what possible motivation there might be for such action. Well, it turns out that because the temperatures are so high, you cannot utilize the water to cool these nuclear reactors, as the existing water would then be so hot as to damage the ecosystem of the lakes and rivers that they use to feed natural fresh water into to cool the nuclear reactions. Second, due to the heat, all the rivers are below their natural level, and barges carrying coal and that gas are becoming trapped in the menu. This means that the Po, the longest river in Italy, which supplies water to all the fields, is below the level at which it can actually dump the water. Consequently, if you take all of that into consideration, you'll start to see an issue where, by November of this year, we'll be back into the same complex situation in which energy will serve as the focal point around which everyone will begin to debate. If you had purchased when everyone else was screaming out, you would have made a lot more money than they did. Currently, everyone seems to think that it's over, and you can see that by looking at the VIX, which is an index that measures volatility. If the past is any indication, we are about to enter the high teens in the United States. And if that holds true, then the VIX is in the teens. When you do this, what you are doing is essentially buying volatility, which means that you are shorting stocks. When the VIX is in the 30s, investors typically sell volatility and buy equities because the market has struck the bug. If you have been doing that for the past year, you have made a lot of money. Thus, he has the tendency to believe that things still have to get a lot worse in order to flush everything through the system. There has never been a time in American history when the consumer price index printed consecutively higher numbers than 5% and then dropped below 5% without the Federal Reserve funds reaching the same level at the same time. Chamath is stating that we should all hope that this is the exception that proves the rule. But there is a tremendous amount of evidence that would tell you that we need to take rates to double what is regarded to be the equilibrium right now. If we do this, then we will have achieved equilibrium. The real problem is that if he goes back to the historical artifacts, have there been issues in the past? Absolutely. That's what Chamath is suggesting, that we can look at the fact that whenever there's inflation and whenever it spikes, what has had to happen by the Fed is you have to take rates above that key 5% threshold when CPI is above 5% to break enough demand so that the economy is reset. Chamath thinks that the reality is that the governments need to flush all these excess money out of the system so that we can really find out what equilibrium demand is and get back to normal. That era of cheaper, faster, and better has come to an end, and along with its passing comes improved national security. However, the price of improved national security is increased costs for consumers, and there is nothing that can be done to prevent this from happening. It is Chamath's opinion that we should get the drug out of the way as soon as possible. For this reason, he has a sneaking suspicion that those on the fringes who argue that the Fed should just be really aggressive and get this over with soon are correct. It's not that they can't look at the historical artifact. The problem is that they refuse to do so, since doing so would reveal that we need to increase interest rates by another 250 basis points. That's not what the world needs to hear at the moment. It would be too disruptive. So we'll move forward step by step. There will be a whack-a-mole that will tip the markets, and then the consumer credit thing will fall apart, which will also tip the markets. The real problem is that over the last 8 quarters, we've had a lot of different kinds of data that have been very unstable and made the trend line hard to predict. One subsector is the best place to see this most clearly. Chamath also thinks that what we need to know is how long it will take for the economy to get back to its normal growth rate. In the second quarter of 2020, we were way short. In the third quarter of 2020, we had a huge amount of money left over. Over the last 5 quarters, the country has been getting back to a state of balance, so we don't really know what the steady state growth should be. This is why he had a problem with the way the White House tried to explain away the fact that we are in a recession by making people doubt the definition. Chamath instead thinks about how important it is to explain simple statistics, actually showing that the country is going in the right direction, mostly because of a crazy one-time event that no one could have seen coming. That it will take a certain number of quarters, so you should really look at employment and wages and try not to jump to conclusions based on one quarter of data. Chamath wants to remind us not to get too worked up about the print on a quarter here or there, especially the label. And he wants people to think about what we need to do to get back to solid state equipment. The point is to have too much money because when money is loose, supply and demand don't work the way they should. The government can give people extra money, but in this case, the extra money came from the government and went into the hands of people. Those people then used the money to trade on the public markets, which changed how things looked. So, there was a lot of shopping going on because it seemed like there was a never-ending supply of free money. So, now that the money is being taken out, he says we don't know what the real growth rate of the economy should be. Because you have to remember that there has never been a time when the government did not spend money. We have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income, and we've distorted the price of equities. We've created an asset bubble in crypto out of nowhere, and now we have to do the hard work of figuring out what the real supply demand is in the economy. The yields on long-term bonds go down, which tells everyone else to change the prices of their assets. What does that do in real life? It makes borrowing money about the same amount cheaper. It makes the price of stocks go up much more quickly, especially ones that are far out on the risk spectrum. For example, let's look at the Nasdaq, crypto, textile biotech, and crypto stocks. Powell's main accomplishment is that he has made a form of easing out of thin air. If you think of the money supply as a pipe, his job at the Federal Reserve is to shrink the pipe to stop demand and bring things back into balance. So even though he's doing this, the way he talks about it lets market participants guess that the worst is over and that we're going to start expanding that pipe again. And so they go to the end state. So, what he did in one speech was basically put a pin in the end of this year and tell the markets that they are mostly done and that he will probably cut in the second half of 23. Go on your way. It's pushing the problem back another 8 quarters, so we need to stop this nonsense. He needs to be decisive and break the back of inflation so that you can see what the real demand is in the economy. In the history of the United States, the CPI has never been higher than 4.5 or 5% without the Fed funds rate also being higher than 4.5 or 5%, which brings the inflation down. So, at some point, inflation will turn around and be between 6 and 7%, which is still above 4.5 and 5%. So if inflation stays between 4% and 5%, we might still be only 50% of the way there. Market participants don't want to hear that there needs to be meaningful tightening, and politicians don't want to hear that the White House definitely doesn't want Powell to be there. The problem is that Powell won't be able to do his job if he listens to too much of this feedback. What can you say about this video content? We really hope you are learning something that will broaden your wisdom about investing and putting your money at a good cause.